Think about the last time you bought a stock, or even just, looked up a company's share price on your phone.
Right.
You pull up a chart, and the whole world is basically looking at the exact same numbers. You see the trading volume, the historical performance, the market cap. It's this completely shared reality.
Exactly. Everyone has the same dashboard.
Yeah. But now, compare that to buying a house. Suddenly, that shared reality just vanishes.
Hmm.
You're walking into what feels like, I don't know, a grocery store where the price tags actually change depending on who is walking down the aisle.
Oh, absolutely.
And the store owner's like charging you just to look at the shelves. It's the biggest financial transaction of your life, yet it feels uniquely opaque and, frankly, terrifying.
It really is a profound contrast. And, that uneasy you feel when you make an offer on a house, that isn't just personal anxiety.
So that's just me being paranoid.
No, not at all. You aren't being paranoid. You are actually experiencing a highly measurable economic phenomenon, that feeling of walking in the dark. It's actually baked into the structural DNA of the real estate market.
Which perfectly brings us to our mission for this deep dive. Today, we are unpacking this genuinely eye-opening market analysis document from the CIRA team.
Right, the real estate group out of Pennsylvania.
Exactly. They operate in Pennsylvania and Delaware. And our goal today is to really look at the hidden mechanics of real estate data. We want to establish the foundational problems of this specific market and explain exactly why the game feels rigged against you.
Because it really does feel rigged.
It does. And the sources make it clear that your instinct that real estate operates on completely different rules than other financial sectors, that instinct is entirely correct.
Yeah, to understand the mechanics of why it feels that way, we kind of have to look at how a healthy market is supposed to function.
Okay, lay it out for us.
Well, economists know that any market fundamentally runs on one core resource, and that's shared information.
Shared information.
Right. When buyers and sellers have roughly equal access to all the relevant facts, prices tend to actually reflect reality.
So both sides can look at the asset and, just agree on the fundamental math.
Yes, exactly. But when one party knows significantly more than the other, you get what economists call information asymmetry.
Information asymmetry, okay.
Yeah, and this isn't just a minor friction point. When information asymmetry becomes severe, the market breaks down entirely. Prices just detach from the actual value of the asset.
Oh,
The wrong transactions take place, and the party with less information, which is usually the buyer, they end up paying a premium without ever even realizing they've been disadvantaged.
okay, let me push back on that for just a second.
Sure.
Because, we never really have perfect information, right? Like if I buy a used laptop from someone online, they obviously know how the battery holds up better than I do.
Sure.
So does one person holding a few extra cards really, break an entire economic system?
If we scale that up to a macroeconomic level, it absolutely does.
Really?
Yes, because a breakdown in shared facts, it basically destroys the pricing reality of the entire ecosystem. Think about the actual mechanics of setting a price.
Okay.
If millions of transactions are based on hidden information, then the market price isn't a reflection of actual value at all.
What is it a reflection of then?
It's a reflection of who was better at obscuring the truth. The entire concept of a fair market value just becomes an illusion because the data feeding that value is flawed from the start.
Wow. Okay, so unpack this for real estate.
Yeah.
Because our source analysis argues that real estate is structurally one of the highest asymmetry markets in the entire U.S. economy.
Oh, it is the ultimate example of asymmetry. I mean, think about it. Every single property is a unique, non-fungible asset.
Right. No two houses are exactly the same.
Exactly. The transactions are kept private. The inventory is totally fragmented. Look at the mechanics of just a single home sale. The seller knows that the basement floods during a heavy multi-day rainstorm, or they know that the neighborhood association is planning this massive special assessment fee for next year.
While the buyer, meanwhile, is just walking through an open house on a sunny Sunday afternoon.
Right, looking at freshly painted walls.
Yeah, looking at the nice landscaping, completely blind to the actual structural realities of the place.
Exactly. The buyer and the seller have almost zero overlap in what they actually know. They are operating in two totally divergent realities, but they are somehow trying to agree on a single mathematical figure.
Which seems impossible.
It is. Neither party, but especially the buyer, has access to the comprehensive data required to make a mathematically sound decision.
But wait, if this lack of shared information is a known economic danger, Like,
Yeah.
if it literally destroys the concept of fair pricing, as you said, why hasn't society built guardrails for real estate?
That is the million-dollar question.
Because we've definitely fixed this opacity problem in other major financial sectors, haven't we?
We have, and the contrast is just staggering. When society decides a specific market is simply, too vital to the economy to leave unprotected, it forces transparency.
Give me an example.
Take the securities market.
Hmm.
The Securities and Exchange Commission, the SEC, they don't just exist to put insider traders in jail because it's morally unfair.
Right.
The SEC exists because information manipulation actively destroys what economists call price discovery.
Okay, break down price discovery for us. How does the SEC actually enforce that?
So price discovery is basically the mechanism by which a market figures out what an asset is actually worth. For that mechanism to work, the data feeding it has to be absolutely reliable.
Makes sense.
So the SEC forces public companies to use standardized accounting schedules. They mandate that financials must be audited by independent third parties.
They can't just make up their own spreadsheets.
Exactly.
Yeah.
And they require that material facts be published in accessible formats at the exact same time for everyone. These aren't just like bureaucratic hurdles. They are the structural engine oil that keeps the capital markets from seizing up.
That makes a lot of sense. So if a CEO knows their company is, say, secretly bankrupt, and they sell you their stock before making that public, the price you paid for that stock was basically a lie.
It's a total fabrication. If a market operates on hidden asymmetrical information, the pricing mechanism is broken. Period.
Right.
And we see these systemic protections everywhere in sophisticated finance. Commodities markets, they use position limits and circuit breakers to prevent players from manipulating supply data.
Okay.
The banking sector has these strict capital reserve requirements that must be reported. Options markets have margin rules.
So they basically built in all these safety nets.
Yes. The architects of those systems understood that information asymmetry is basically a weapon. It's used to exploit participants. So they engineered systemic mechanisms to disarm it.
Which raises the pivotal question for you listening right now. If Wall Street has all of these intense guardrails, and if banking and commodities have strict rules specifically designed to mandate shared facts, why is the real estate market left completely in the dark?
Yeah.
I mean, this is the place where most people park their entire life savings. Why doesn't it have these systemic protections?
It is a glaring historical anomaly. Real estate has remained uniquely unprotected at a systemic federal level.
Crazy.
Instead of mandated transparency, it relies almost entirely on localized private practices. And, in economics, nature abhors a vacuum.
Oh, for sure.
Where there is a lack of systemic protection, opportunists will inevitably step in to capitalize on the blind spots.
Which brings us to the twist in our source material. Because if you're listening to this, you're probably thinking about the phone in your pocket right now.
Right, the apps.
Yeah, didn't the internet solve this? Like a decade ago, all these massive real estate tech platforms and apps launched with a very specific grand promise. They were going to be our digital white knights.
That was definitely the PR spin.
Right. They told us they were going to democratize real estate and turn the lights on for everyone.
That was the pitch. They said, the market is dark, but we have the data and we will fix this for you. But the market analysis from the SEER team points out a very harsh reality. The tech platforms did not fix the symmetry. In fact, they made it vastly more complex and in many ways a lot worse.
Wait. How does an app make it worse? If I can suddenly open my phone and see every house for sale in my zip code, isn't that a step toward that SEC-style transparency?
It creates the illusion of transparency, and that illusion is dangerous.
What do you mean?
What these platforms discovered is that acting as a true neutral utility, simply sharing all the information equally with everyone, that isn't very profitable. Controlling the information, however, is immensely profitable.
Walk us through the mechanics of that. How do they actually control it?
Well, they pose as neutral infrastructure. They want you to believe they're just the digital pipes delivering the housing market straight to your screen.
Right. Just a helpful map.
Exactly. But in reality, these platforms exercise immense algorithmic influence over the market. They control what buyers and sellers see, exactly when they see it, and at what perceived price. They act as gatekeepers.
So going back to that grocery store metaphor from earlier,
Yeah.
the tech platforms aren't actually turning on the lights in the store.
No.
They are just charging the food brands for prime shelf space, hiding the generic brands in the back, and, putting an estimated price tag on the apples that might not actually reflect what the cashier will charge you.
That is a highly accurate way to look at it. Rather than acting as a digital SEC that enforces equal access to facts, the platforms weaponize the asymmetry.
Weaponized it. Wet.
Yes. Think about their business models. They don't make their billions by ensuring you pay the exact mathematically fair price for a home.
Right, that's not how they make money.
They make their money by selling your attention and your contact information to the highest bidding agent.
So their incentive isn't to give you perfect clarity.
No, their incentive is to give you just enough data to keep you engaged on the app while withholding the critical contextual information that would actually empower you.
That is wild.
By maintaining a level of opacity, they force you to rely on their ecosystem. The opacity they explicitly promised to cure literally became their foundational business model.
That is such a fascinating bait and switch.
Yeah.
We thought we were getting this democratized data feed, but we were actually just getting a highly curated algorithm designed to monetize our lack of information.
And that algorithmic curation actually distorts the price discovery we talked about earlier.
How so?
Well, when a massive platform publishes a proprietary price estimate for a home, that number anchors buyer psychology.
Oh, I see. Even if the number is wrong, people believe it.
Exactly. Even if the platform's algorithm is totally blind to the structural flaws inside the house because, it only sees public tax records and zip code averages, that number still influences the market reality.
Right.
The platform is basically injecting its own asymmetrical data into the ecosystem.
Okay, so if the federal government isn't regulating the information to protect us, like they do with stocks,
Right.
and the tech platforms are actively hoarding and manipulating the information to profit off our blind spots,
Yes.
how does a normal person actually survive this? I mean, how do you buy or sell a house without getting taken out at the knees?
This is where we look at the survival mechanics detailed in the source. Because if you are operating in a structurally dark market and no one is providing systemic light, you have to build your own localized illumination.
You have to do it yourself.
Exactly. You have to combat the asymmetry from the ground up. And the SIR team case study in our sources, it provides a really clear blueprint for how local professionals are forced to adapt to this broken system.
Let's look at that blueprint. So the SEER team, led by Vincent and Jane Sear, they operate across Chester, Delaware, and Montgomery counties in Pennsylvania, plus Newcastle County in Delaware.
Right.
And the source says they've handled over 400 transactions since 2009. But the material emphasizes that their sales volume is actually a byproduct of a massive data infrastructure they had to build from scratch.
Yeah, they recognize that relying on the opaque, generalized data from the big tech platforms was just dangerous for their clients.
So what did they do?
They built their own market intelligence system, and the sheer scale of what a local team has to track just to find the truth is incredible.
It's a lot of data.
It is. They are actively tracking 25 school districts, 977 distinct neighborhoods, and they've monitored $1.74 billion in localized property appreciation.
Tracking 977 individual neighborhoods. I really want to pause on that because it illustrates the core problem so well.
It really does.
They essentially had to build their own private, localized SEC just to figure out what a house in their specific region is actually worth.
They did. Because a zip code average from a tech platform doesn't tell you anything real.
Right, a zip code is too broad.
Exactly. A zip code might have a luxury development on one side of a highway and an aging subdivision on the other. If you blend those numbers, you just have meaningless data.
Totally useless.
So by tracking at the neighborhood level, they are manually creating the price discovery that the overall market lacks.
And the source notes that Vincent Sear took this raw data and built proprietary tools to execute on it. There's something called the WB3 predictive pricing model and an offer strategy tool called Offer Edge.
Yes.
Let's dig into the mechanics of that. Why would you need custom tools like that?
You need them to strip away the noise. A predictive pricing model like WB3 doesn't just look at, what a house down the street sold for last month.
It goes deeper than that.
Much deeper. It evaluates the hyper-local historical trends against macroeconomic shifts. It's designed to look past the seller's asking price, which, by the way, is often just an arbitrary number meant to trigger bidding wars.
Oh, of course.
And it calculates the actual mathematical reality of the asset.
And then Offer Edge, the strategy tool, takes that mathematical reality and figures out how to actually maneuver the transaction.
Yes, because in an asymmetric market, The listing price is really just a suggestion.
Right.
A strategy tool factors in days on market, the specific history of the neighborhood, and all the hidden variables that the seller might be dealing with.
So it gives you leverage.
Exactly. It allows a buyer to structure an offer that capitalizes on data the seller might not even realize is exposed.
Wow. The sources also highlight Jane Sears' specialized credentials, specifically something called the RCSD, which deals with divorce real estate.
That's a critical piece.
Yeah, at first glance, that just sounds like a super niche certification.
Mhm.
But in the context of information asymmetry, how does a divorce credential specifically combat this dark market?
Divorce is a scenario where information asymmetry can be utterly devastating. Think about the mechanics of splitting an asset during a divorce.
Mm.
Often, one spouse has handled all the maintenance and finances for the home while the other hasn't. That creates a massive knowledge gap right from the start.
So, like, one person knows the HVAC system is on its last legs and the roof has a slow leak, and the other person thinks the house is in perfect condition.
Exactly. If they're dividing their assets based on a generic online price estimate, the spouse who lacks the information might agree to a buyout number that is wildly inflated.
Oh, wow. They'd get completely ripped off.
They might end up keeping a crumbling asset while giving up liquid cash simply because they didn't have the data.
That's terrible.
It is. Specialized training like the RCSD is designed to force transparency into that specific microtransaction. It's about auditing the house the exact same way the SEC audits a company, ensuring both spouses are looking at a shared reality before the math is finalized.
That brings up one final, really crucial detail from the SEER team's operational model. The source explicitly highlights that they operate on a strictly fiduciary-only basis.
Yes, very important.
This means they will represent the buyer or they will represent the seller, but they never represent both sides in the exact same transaction.
Never.
Why is drawing that hard line so important in this specific environment?
Because of everything we've just discussed. If the core problem of the market is severe information asymmetry, the interests of the buyer and the seller are fundamentally at war.
Right.
The seller's financial incentive is to hide the flaws and maximize the price. The buyer's financial incentive is to uncover those flaws and minimize the price.
So if an agent tries to represent both of them, which is a practice called dual agency, right?
Yes, dual agency.
How does that even work mechanically?
Mechanically, it fails. A dual agent is legally and mathematically incapable of fully advocating for either party. You cannot negotiate against yourself.
It's impossible.
In a market that already lacks transparency, allowing one person to hold the secrets of both sides basically turns them into a double agent.
A double agent, wow.
By committing to a fiduciary-only model, a team is guaranteeing that their massive, localized data system, their private SEC, is being deployed as a weapon exclusively for one side of the table.
That makes total sense.
Unwavering loyalty, backed by granular data, is really the only real shield against a market designed to keep you blind.
Let's pull all these threads together. We started by validating that universal feeling of unease when dealing with real estate.
Right.
And we now know that real estate feels chaotic and entirely different from buying a stock because it is fundamentally built on the economics of information asymmetry.
Exactly.
It completely lacks the systemic federal protections that keep our other financial markets honest. The tech platforms that promised to fix it simply realized that hoarding the data was way more profitable than sharing it.
Yep, they capitalized on the dark.
And the only way to navigate it is with hyper-local, rigorously tracked data and uncompromised representation.
It is an environment that requires you to actively seek out your own leverage because the system will not provide it for you.
So, for you listening, here's how you apply this deep dive to your own life. The next time you open up one of those glossy real estate apps or, you drive by a house for sale and check the price on your phone, remember the mechanics of what you are actually looking at.
Right. Keep that in mind.
That clean interface is an illusion. You are not seeing the whole board. You are stepping into a high-stakes ecosystem that is highly motivated to keep you guessing, protect your data, and always question the source of your information.
Which leaves us with a final thought to mull over. We've established that the massive technology platforms dominating real estate make their billions largely off this opacity.
They absolutely do.
They monetize the gatekeeping of asymmetric information. So consider this. What would happen to those multi-billion-dollar tech monopolies if tomorrow real estate data actually became as stringently regulated and as perfectly transparent as the stock market?
Something to think about. Thanks for taking this deep dive with us. Catch you next time.